$100,000 per week. So today, I thought I'd walk you through each income stream, explain how I got started, and rate them on a scale of 1 to 5. This video is going to create future millionaires because after watching it, you'll have all the information you need to build multiple income streams and escape the traditional 9 to 5 life. First is my retail stores where I sell remote control planes, helicopters, cars, and more. Many young people believe the only way to start their own store is by launching an online one. Now, I can see why people might think this because there are lower startup costs, a global customer base, and you have the flexibility to run the business from anywhere you like. But just because online stores are easier to start, it doesn't mean that physical stores are outdated or unachievable. I mean, just look at the amount of physical locations the Sidemen are opening up, from fried chicken shops to clothing stores. But Mark, starting a retail store requires a lot of money. You're basically saying to become rich, you already have to be rich. Disliked and unsubscribed. I understand it might seem that way, but when I started my store, I had hardly any money. I'd recently resigned from my job and dropped out of school with no qualifications to fall back on, so I simply had to make it work. I'm not going to sit here and tell you it was easy for me because it really wasn't. I remember on the opening day of my first model shop, I put a sleeping bag in the back of the van because unless I made enough money on the day, I couldn't even afford to fill my car with fuel to get home. So how did I manage to start a shop with barely no money to my name? Well, I got funding, which is something you can do too. I know it sounds a bit complicated, but I took 3 simple steps. Step 1 is to write a business plan. I identified the perfect location for a shop, how I was going to attract customers, how much money I needed, how I was going to allocate that money, and finally, how much money I thought I could make. Back in the day, this was about as far as I could go without professional help, but now you can go one step further and find a free business plan template online to make your plan look as professional as possible. Step 2 is to do some customer research. You have to find a cheap way to test out if your business will actually work. So many people come up with a business plan and get so carried away with it that they don't actually ever consider going out and asking their potential customers what they think. This step is all about going out into the real world and gathering actual data. Trust me, doing this will save you so much money and potential headaches. You may even find you need to adapt your plan. I did this without even knowing it, as I worked in someone else's model shop on the weekend. This allowed me to talk to customers and find issues within the business that I could fix in mine. You can also walk around with a clipboard asking people's opinions, like they probably force you to do on school trips. But if you can get a part-time job in a similar business, then it can prove to be the best customer research opportunity ever. Step 3 is to get funding. I got my initial money in the form of a bank loan. It was very hard to secure, but I eventually got it by knocking on enough bank managers' doors until someone believed in me. Nowadays, there are so many alternative funding options available, such as crowdfunding. If you have a solid business idea, you can use platforms like Kickstarter to raise money by pitching your concept directly to potential customers. Right, time to rank this income stream out of 5 stars in my 3 core categories. Firstly, how much time does managing a retail store take? I'm going to give this a 2 out of 5 stars because I'm not going to lie, it takes a lot of your time at the start. However, with that being said, as time goes by, you can afford to take a step back, especially when you start scaling it by hiring staff and implementing systems that can run whilst you're not there. Now I probably spend less than a couple of hours a week actually in this store. Secondly, how much money do you need? I'm going to rate this 4 out of 5 stars because although the initial stage of, how do I get the money is tricky to overcome, you don't have to do it all alone. And there are so many investors, loans and crowdfunding methods that can get you there, especially if they see the potential in your business. Thirdly, how easy is it to make $100 per week? You know what? For this one, I'm going to say 5 out of 5 stars. If you're really passionate about what you're selling and you know the ins and outs of the niche, then you'll sell. To be a top seller, you have to make the customer buy into not just the products, but into you. Second is my own brand and product range, which I manufacture in China and distribute all over the world. When I was younger, the idea of seeing my own products on the shelves of other shops seemed just like a dream. I would sit in school staring at my drawings of model aeroplane designs, thinking, how can I make this happen? I always thought you had to have millions of dollars, niche connections, or a huge team behind you to make it a reality. I was wrong. Little did I know years later, I'll be sat clutching onto my designs I drew as a kid on a plane heading to China. So how did I go from a kid with a dream on a piece of paper to a successful brand owner? Well, I took 3 key steps that you can replicate to get started with your own brand. Step 1 is picking a niche. Back in my day, model aeroplanes were all the rage. If people weren't watching the latest competitions or going crazy for new designs, they were busy collecting kits and accessories to customize their own. It had what's known now as a cult following. You need to identify a popular niche with lasting appeal, not just a fleeting fad. I'd personally start by following Instagram pages and joining in on the conversations. You need to know what the people in this niche are passionate about. Also try to understand their challenges to use to your advantage. Step 2. Keep an eye on trends. Take a brand like Represent, for example. I mean, it just got so popular out of nowhere and ended up on everyone's Christmas list. They recognized the growing trend for oversized clothing within the fashion industry and quickly capitalized on it with their oversized hoodies and tracksuit sets. This is where they really made a name for themselves. It's interesting because if you look at them now, they're moving more towards fitness gear with their 24/7 range because they're following new and rising trends. Here in the UK, fitness has become so popular with 74% of people owning fitness products. I mean, even the nightclubs are shutting because young people aren't drinking as much. It's clear that Represent have spotted this trend and created a new clothing range to meet the demand. You should aim to do the same in your chosen niche. Step 3 is creating a culture. If you can build a real community around your products, that is the secret sauce. It's not just about selling stuff anymore. People feel like they want to be part of something bigger. This way your brand sticks around because customers are all in, not just for what you're selling, but for the whole vibe. My son Curtis recently participated in the Super 10K Spartan race, which was filled with obstacles like monkey bars, rope climbs, and even swimming through icy water. It's become more than just a race. It's now become a movement where people go to test their limits and meet like-minded individuals. They've built a genuine community with around 1.5 million people participating last year. There's even been a wedding ceremony on the start line with the whole wedding party completing the course. So maybe have a think about how you can do this too in your own niche. Now, onto the rankings. Firstly, how much time does creating your own brand take? I'd say a 2 out of 5 for this one because you're going to have to put in the work. You'll have to post online consistently to build the audience, keep up to date with research, and also keep up to date with trends so you can ride with them instead of drowning in them. Secondly, how much money do you need? I'd give this one a 3 out of 5 because you do need some initial capital, but once sales start rolling in, growth can happen quickly and you can then reinvest that money to fuel further expansion. Thirdly, how easy is it to make $100 per week? I'd rate this 4 out of 5 stars if you've completed steps 1 and 2, and 5 out of 5 if you've achieved all 3. Once you've built hype and people are talking about your brand on social media, there's no reason you can't easily make $100 per week. Third is my eBay store, where I buy stock from failing shops and sell it online. Not to toot my own horn, but I made quite a name for myself in the model industry, and people started asking me to help them with their failing businesses. With all my experience and knowledge, I thought to myself, why not? Before I knew it, it became a side hustle. I remember the first time I visited a struggling store and offered them a lump sum in exchange for their stock. I then listed the items on eBay in my spare time, and I was completely shocked by the results. I managed to triple my money, so I just kept going and bought lots more failing businesses. Before long, I ended up with this warehouse full of gear behind me. Now my team just lists these items on eBay for me. It's become a huge part of my business, and I never imagined my little side hustle could transform into something as big as this. I know what you're thinking, but Mark, I don't have enough money to just buy failing businesses. How can I do this too? Well, here's my best advice for getting started with eBay. Step 1 is to identify businesses run by older people. The world has changed a lot and the traditional methods aren't as effective anymore. That's just how the world is. It just keeps on changing and you've got to change with it if you want to stay on top. Unfortunately, some older business owners are just left in the dust. This is where you come in. Step 2 is to approach these older owners and ask if you can try and offload the stock they can't sell, then list and sell it on eBay in exchange for a commission. This way, they get rid of their dead stock and you can earn some extra cash. It's a win-win. Over time, you'll be able to build up profits, and this is where the game changes. Step 3 is to use your profits to start buying directly from your own supplier. This is a huge turning point because you'll be in control of the products you offer, the pricing, and the customer experience. This gives you far more flexibility for profits and enables you to build up a strong reputation as a seller. This is crucial for scaling this side hustle into a real business. Okay, once again, it's time to rank it in my categories. Firstly, how much time does running an eBay shop take? Well, I'd say this is a 3 out of 5, if not a 4, because you don't need to come up with any of the products or designs. You're simply selling someone else's stock. If you've got things running smoothly, then there's no reason why you can't be selling in your sleep. Secondly, how much money do you need? I'm going to rate this a 5 out of 5 because you can actually get started with $0, especially if you're selling stuff for a commission like I recommended. It's really accessible and a great way to get stuck into business and learn on the go. Thirdly, how easy is it to make $100 per week? I'm going to rate this a 5 out of 5 because all you have to do is sell 50 items with a $2 profit on each and boom, you've made an extra $100 that week. Fourth is the stock market, where I invest my money and let it grow over time. I'm no financial advisor, but in my humble opinion, this is something everyone should be doing because without investing, your money is losing value due to inflation. Over the last 60 years, this averages out to be a loss of 3.8% per year. So if your money isn't growing by more than this on its own, then you're getting poorer by the second. In a perfect world, you'd have a savings account that provides an average return of 8 to 10% every year, so that you can both beat inflation and earn some profit. Unfortunately, such savings accounts don't exist. However, you can achieve returns like this by investing in the stock market. A stock is a small part of a company, and when you buy it, you become a shareholder. When you're a shareholder, there are 2 ways you can make money. The first way is if the price of the stock goes up during the time you own it. Then you can sell it for more than you paid. The second way is receiving dividends. Dividends are regular payments to shareholders. Now, not all stocks pay dividends, but if they do, this means you can receive money without ever selling your stock. You can start investing from your phone. My son has actually been investing £5 a day for over a year now on the Trading 212 app instead of buying a morning Starbucks coffee. It's a bit of an experiment, and as you can see, that small investment is now worth £1,783, which is a profit of £276 or $359 for all my American subscribers. That's a return of over 18%. Of course, past results are no guarantee of future returns, but that's not bad for a little experiment. To set something like this up, all you have to do is select pies and then click the plus button. Now you can select whatever stocks you want to include in your pie. For this demonstration, let's just pick the same investment as my son, this S&P 500 index fund. Now, let's tap add to pie and then the arrow button. Right, tap next and then auto invest. This value projection is really awesome as it shows you how much money you could make based on the historical averages. Of course, when you invest, you can get back less than you invested, as investments can rise and fall, but it's still a great way to get an idea of how much you could make based on data-backed projections. I mean, say we invested £250 per month for 31 years. This says that you'll have only invested £94,250 and your portfolio could be worth £2.19 million. And if we expand this to 40 years, that could give you a portfolio worth of £8.63 million. That's over $10 million. Now, let's rank this income stream out of 5 stars in my 3 core categories. Firstly, how much time does investing take? I'd rate this 5 stars out of 5, as all you have to do is download an investing app such as Trading 212, deposit some money and start investing. Since I was planning to talk about Trading 212 anyway, I reached out to them to see if they'd be interested in sponsoring this portion of the video. They agreed and are offering a free stock worth up to £100 to anyone that uses the code Tilbury when they sign up and fund their account with as little as £1 or €1. Plus you can get more free shares by inviting your friends. Both of you will get a free share as long as they fund their account. Also, don't worry if you've opened an account in the last 10 days. You can still use the promo code Tilbury in the app and receive your free share. Secondly, how much money do you need? I'd rate this a 5 stars out of 5 again. As I've shown with my son's experiment, you can start with as little as the price of a Starbucks coffee a day or even less. Because of the way compound interest works, it's much better to get started sooner rather than later, so that time is on your side, even if you can only put aside a little bit every month. Thirdly, how easy is it to make $100 per week? This will have to be a 2.5 out of 5 because it's very challenging to make this kind of money at the start. As you can see by this graph, net worth really starts to accelerate after the first 100K. For me, making $100 a week from investments is now the easiest thing in the world. So who knows, by the time you reach my age, you could be making far more than $100 a day through investing. Fifth is my residential real estate. I rent these out to families. When I was younger, I wanted to build an income source that would constantly bring in money even if I decided to stop working. So I did some research, and that's when I bought my first residential rental property. It's actually this one, and it's in an up and coming area with great transport links to London and good local schools. But the truth is, I regretted the investment as soon as I bought it. The reality was, it needed a lot more fixing up than I'd initially thought, and I just tied up a big amount of my money. But I was committed now and I needed to make it work. So I spent every free moment down at the house fixing everything myself to save costs. Now looking back, this was hands down one of the best decisions I've ever made. It's over doubled in value and along with my other properties has given me a steady income for years. Look, I'm not going to lie, getting into real estate usually takes a big chunk of change to start, but there is a good way to get started without actually buying any property yourself. It's called deal sourcing. This involves you sitting at a computer, finding deals, and then sending them on to real estate investors like me and receiving a commission. I'm always on the lookout for great deals, and so are thousands of other real estate investors. So here are the 3 simple steps you can take right now to start this. Step 1, educate yourself. Learn about the local real estate market, property values, and investment strategies. Become obsessed, watch videos, and read plenty of books. Step 2, build a network. Connect with real estate agents, property managers, and other investors. Attend local real estate meetups and join online forums to expand your connections. Step 3, start finding deals. Look for undervalued properties or motivated sellers through online listings, auctions, or by driving around neighborhoods. When you find a good deal, present it to investors in your network for a finder's fee. Even if you don't plan to deal source forever, this experience will prove invaluable when you eventually become a real estate investor yourself. You'll already possess all the necessary knowledge. In my view, it's a win-win situation. You're learning and earning at the same time. So it's time to rank this income stream. Firstly, how much time does residential real estate take? This is a 3 out of 5 as it does take time to find good deals, and if you're the investor, you might need to put in some work to fix up the property at the beginning. Secondly, how much money do you need? If you're deal sourcing, then this is a 5 out of 5 stars as you don't need any money to get started. However, if you're investing, then you'll need a significant amount of money to buy the property and also maintain it. Take it from me, being a landlord isn't always easy. I remember when I dealt with all my properties personally, I'd get called up for the craziest of things. Once I even found myself fixing a roof tile during a major storm. And thirdly, how easy is it to make $100 per week? This is a 5 out of 5 as it's relatively easy to make $100 a week. If you're deal sourcing, once you've learnt the ropes, just one finder's fee can earn you thousands in commissions. For investors, you can generate income from both rental payments and property value appreciation. Sixth is my commercial real estate. I rent these warehouses to different businesses. This one is just about to go on the market. This is something I explored later in life after I'd invested in the stock market and residential real estate, and I recommend you do the same. I was interested in boosting my cash flow, and you can typically earn more per month rented to businesses rather than families. However, my warehouses are unlikely to increase in value at the same rate as my residential properties. I'm going to keep this one short and skip to the ratings. First, how much time does commercial real estate take? I'll give this a 3 out of 5 stars. Honestly, it can be relatively hands-off once you've got the tenants in place. However, setting it up does take time, from finding good warehouse space to making sure it's ready to lease out. Once you're up and running, it only really requires you to manage the tenant relationship. Secondly, how much money do you need? This is a 1 out of 5 stars, as commercial real estate isn't cheap and upfront costs can be high. However, financing options and partnerships are often available for this kind of investment if you're not ready to put in all the money yourself. And thirdly, how easy is it to make $100 per week? This is a 4 out of 5 stars, as the potential is definitely there, with most commercial leases bringing in well above $100 per week. Once leased, multiple shops and warehouses. Then, almost overnight, the internet made it irrelevant. I had 2 choices: give up or adapt. You know me, I wasn't about to quit, so I threw myself into learning everything about making money online. And like most people today, I fell for the hype. I tried every method out there, and guess what? None of them were as easy as people said. But through trial and error, I cracked the code and rebuilt my businesses, but this time with the internet at the core of my strategy. Fast forward to today, and making money online isn't just important, it's an essential thing everyone should be doing. That's exactly why I'm making this video. I spent years testing, failing and refining, losing millions, making millions, and learning what actually works. Now with this knowledge, I can help you avoid all the mistakes and fast track your success. So if you're tired of false promises and ready to commit for the next 6 to 12 months and build something real, this is for you. No gimmicks, no BS, just the process that actually works. All right, so this is the online wealth wheel. And whether you realize it or not, you're already on it. There are 3 main stages that define where people are in their journey to making money online, plus a secret 4th stage that only a few ever reach. We'll discuss that one at the end. Let's kick things off with stage 1. This is where everyone starts with no side hustle. And sadly, 55% of people never start at all. Inflation is making everything more expensive. And let's be real, relying on a single paycheck is more dangerous than ever. So if having a side hustle is essential, why do 55% of people still avoid it? Because the online space is a jungle. It's full of ads pushing proven methods that confuse more people than they actually help. The key to starting the right way is picking a method that suits your skills, budget and lifestyle. If you already have a skill like video editing, graphic design, coding, or even setting up Discord servers, people pay great money for these services and there's no shortage of demand. But what if you don't have a skill to sell, or quite simply don't want to deal with clients? That's where product-based businesses come in. One of the best options is selling products online without ever holding inventory yourself. But I'll get into this in more detail later on. That brings me on to running a failing side hustle. I'm classing a failing side hustle as earning less than $50 per month online. Sadly, 28% of people are trapped here. A lot of people aren't going to like me saying this, but it has to be said. It's almost never your side hustle that's flawed or doesn't work. You're most likely just not putting enough time and effort in. I know that can be hard to hear, but this isn't really your fault. It's down to something called shiny object syndrome. This is when you constantly jump from one trendy online money-making method to another without committing and putting your absolute all into any of them. One week it's drop shipping, then print on demand, then selling books on Amazon KDP, then trading stocks, and then starting a social media agency. The truth is, all the online money-making methods I just mentioned work, but each requires a different level of time commitment, and you'll never get anywhere by jumping from one to the other. It's like that classic diagram of miners tirelessly digging for gold, only to give up just before striking it rich. Instead of pushing through, they abandon their progress, start fresh somewhere else, and waste all that initial effort repeating the cycle over and over again. If you get stuck in this dangerous pattern like the 28% of other people, then you need to recognize it and simply pick a method and stick to it. Forget the idea of a perfect side hustle. Just pick one that's easy to start and has the potential to scale. If you don't have a high income skill to sell, then I'm going to make this super simple for you. In all my years of experience, the thing that has made me the most amount of money online is e-commerce. So I recommend you focus on that, but not in the way most people do. A lot of beginners assume starting an online store means dealing with inventory, suppliers, or complex setups, but that's not the case anymore. That's because you can now utilize AI-built Shopify stores. Instead of spending weeks setting everything up like I had to back in the day, you can now use a free tool called BuildYourStore.ai to launch a fully automated store that would normally cost $200 to $300 to set up, but this does it for free in a matter of minutes. You just enter your name and email, pick a niche like fashion, tech, or pets, and the AI chooses winning products, designs your store, and makes it look professional from day one. If you want to go through this process completely for free, then just click the link in the description and it'll walk you through everything. From there, it syncs directly with Shopify, giving you exclusive access to a 3-month Shopify trial for only $1 per month. But what about making sales? Well, the biggest mistake people make with e-commerce is giving up too soon. Surprise, surprise. This is probably because they don't want to deal with inventory or fulfillment. That's why the free AI Store Builder also walks you through how to integrate a tool called AutoDS, which is kind of like the autopilot system on a plane. It imports trending products, updates pricing and images, and even ships orders directly to your customers. This means you don't have to touch inventory, package anything, or deal with supplier negotiations. You focus on driving traffic and making sales while the system handles the rest. Full disclosure, AutoDS are long-term supporters of this channel, but even if they weren't sponsoring this portion of the video, I'd still recommend them. You can easily create a buzz around your products by creating videos about them on TikTok for free. If you get 100k views and just 1% of the people go and buy your product for $10, then that's $10,000 in revenue. So if you're serious about breaking out of the failing side hustle trap, then choosing a simple automated model like this gives you the best chance at success. No more bouncing between business ideas, just commit, launch, and put in the work to scale it up. Stage 3 is running a successful side hustle. Believe it or not, only 16% of people who start making money online ever make more than $50 per month. The people in this percentile make anywhere from $51 on the low end all the way up to $10,000 a month. Of course, the higher end is what I'd consider actually successful. So what are these 16% of people doing differently, and how can you start applying it to yourself? Well, there's some clear things that I've noticed that separate the people who struggle from those who actually make money online. And to help you get there, I'm going to break them down into 4 key steps that you can follow. Step 1 is to stop trying to appeal to everyone. You might think casting a wide net will get you more sales, but in reality, it does the opposite. If you try to appeal to everyone, you'll appeal to no one. So before you even start promoting your store, grab a notepad or open your notes app and describe.
20s think they're invincible. I know I certainly did. I think I was a bit, to be honest. But actually, the truth is, in your 20s, you're more vulnerable than ever. If someone makes a financial mistake at this point in their life, it will send shockwaves through their entire future. Each of these mistakes is very different. So it's really, really important that you watch this video until the end. Otherwise, you could fall victim to one of them. So smash that like button. All right, done that? Let's jump straight in. Number 1 is not taking advantage of your free time. Now, in your early 20s, you are incredibly rich in one way. You've got bundles and bundles of time. You can do so many things to turn your spare time into cash. And if all you're doing is wasting your time, then all that potential income is just slipping through your fingers. This is also the ideal time to invest in yourself and build your skills. I used to use my spare time in my 20s sketching model planes, and this has led me to having them manufactured and selling them all around the world. In fact, one of my biggest designs is the biggest selling RC aircraft in the UK. The original design for this was sketched in a classroom while I was being bored by the geography teacher. I remember him well, Mr. Woolard. So developing those skills from an early age has served me very, very well. Number 2, trying to keep up with your friends. Everyone has that one friend that always seems to have the nicer car, the nicer house, and sometimes the hotter partner. Let me tell you a secret, all right? The majority of people are faking it anyway. As of 2020, the average American household had a credit card debt of over $5,700. This is astonishing, as it means the friends you're actually trying to keep up with are probably more in debt than you are. Having access to so much easy credit allows people to rewrite reality. At the end of the day, friends that need impressing are not true friends. Real friends are the people that love you no matter what. They stick by you through your troubles and are there for you when you need them. They are the people who couldn't care less what you spend your money on. Number 3, over drinking and partying. When you're out drinking, it's easy to get caught up in the moment and spend a lot more money than you usually would. Now, this is most people's kryptonite. It's one of the things that keeps many people broke and, of course, unable then to invest. I'm not saying that going out and enjoying yourself is wrong, as you have to do what makes you happy. The key takeaway from this is everything is great, but in moderation. You may think that saving a few dollars here and there won't make a difference, but your dollar is worth so much more when you're younger. By investing it instead of spending it on something you really didn't want anyway, it's going to be worth dramatically more in 20 years' time. Number 4 is putting off retirement investing. When you're in your 20s, retirement seems like a lifetime away. Many people put off investing in their retirement until they're about 45 or 50 years of age because of many excuses. They've got a mortgage to pay, they've got a college fund to save for, and of course there's holidays. These lost years can cost you very dear. So let me explain. If you invested $100 a month for 30 years at 7% annual return, you would have $116,945 set aside in your retirement fund. And this can continue to grow until the point you decide to retire. But if you put off investing in your retirement, let's say 10 years, and you start investing the same amount for a 20-year period, wait for it, you're only going to have $50,000 in your retirement fund. Yes, it can grow, but you're starting from such a low base, just $50K. $50,000 is a huge amount of money just to lose. And the reality is that $50,000 would have only cost you $12,000. So lots of free money. I was very lucky. My mentor advised me to save and invest in a pension from the age of 18. I've always been told that you should put at least, not a minimum of, at least 10% of everything you earn, and it's given me the ability to use that money in lots of different investment opportunities, such as business, real estate, and also stocks and shares. Even Einstein said, compound interest is the 8th wonder of the world. Number 5 is not having a backup fund. Now, over 60% of millennials wouldn't be able to cover a $1,000 emergency. That's 60% wouldn't have enough money for a minor emergency. Now, I know I bang on about this, and I do bang on about it a lot of the time, about having a backup fund, but that's because it's super important. I learned it the hard way. When I was 19, I purchased a car that I needed a loan to buy. The engine in it lasted me about a month before it blew up.
There are 40 money-making books that have really stuck with me. So in this video, I'm going to condense all of these books into the core lessons that will actually make you rich. And no, I'm not just saying this, I have experience doing it. I've gone from absolute zero to making tens of millions, and I didn't make my money on YouTube like most people on here. I did it running real businesses. So I promise that the things I'm going to share with you today will take you from $0 to $100,000, $100,000 to $1 million, and $1 million to $10 million if you apply them correctly. Level 1, going from $0 to $100,000. First, you need to master your mind. I didn't come from a wealthy background, and during my youth, I vividly remember people saying the phrase, money is the root of all evil. Secrets of the Millionaire Mind explains how these phrases program us to believe that rich people are the devil. It took me a long time to rid myself of the negative feeling in my stomach when I thought about making money. If I'd have read this book sooner, it would have helped me realise this issue earlier. Once I got over this hurdle, I had to ask myself, what is money actually for? For me, the answer was freedom. The psychology of money puts it a little differently and says it's all about control, but I suppose the goal is the same, to be able to do whatever you want, whenever you want. It also touches on how there's a clear difference between the rich and the wealthy. Wealth is what you don't see. The car's not purchased, diamonds not bought, renovations postponed, clothes forgone, and first class upgrades declined. Unfortunately, many people don't even believe that they can become wealthy. I remember my school friends saying things like, I hope I can get an okay job when I graduate. They weren't even hoping for a good one. The magic of thinking big explains that people are setting their finish line too soon and therefore never have a shot at being successful. While I don't believe that thinking big alone will make you successful, it's certainly the first step. I always struggled in school and felt like a failure. Interestingly, when I left and started working in the real world, I found that I kept winning. This was probably because I chose jobs I had an interest in rather than learning things I didn't care about at school. The Winner Effect talks about actual studies to back up this phenomenon. The book discusses how positive correlation has been found between successful stock market traders and their testosterone levels. Furthermore, winning increases the testosterone receptors in your brain, which causes you to win more in the future. That's why it's important to set those achievable goals and get those little wins every day. I believe that my struggles in school and my strong drive for success had a positive impact on my life. They left me with no other option but to push forward. Think and Grow Rich tells the story about a great commander. Despite being outnumbered by a far superior enemy, he burned his army's own ships, leaving them with no escape plan. This forced his soldiers to fight with everything they had, resulting in a miraculous victory against all the odds. It just shows there's a big difference between wanting to succeed and needing to. Being comfortable is just as harmful as having an escape plan. During a chat with Andrew Tate, he referred to this as one of the Matrix's tools. Unscripted also presents this idea. The author argues that society aims to transform us into model citizens, which stands for mediocre, obedient, dependent, entertained and lifeless. Avoiding this fate depends on how well you can manage stress. The essence of success gives us a helpful perspective on this. The book mentions that all the water that forms a fog that's 100 feet deep and 7 city blocks wide can fit into a small glass. Whenever I feel stressed, I like to imagine drinking this water and using it as fuel. Now you can develop great habits. Stress can also come from factors outside our control. For this reason, I've made a conscious effort throughout my life to only focus on things that I can directly impact. Atomic Habits reveals that many people fixate on the end goal, which they have no control over, rather than the process of achieving it, which is completely in their hands. I found the author's habit stacking technique to be particularly helpful for forming new habits. It involves pairing a new habit with an existing one, so both are completed at the same time. However, most people just keep putting things off and never form good habits. I know far too many people who just go through the motions without any direction, and before they know it, time has run out. The 7 Habits of Highly Effective People stresses the importance of always knowing where you're going and thinking about how you want to be remembered. I know this provides me with extra motivation, but this is only one part of the equation. The 12-week year suggests treating a year as 12 weeks to create a sense of urgency. This really hit home for me, as I know I work best under pressure. Although short-term pain is often necessary for long-term gain, it can be difficult to remember this when faced with challenges. The art of getting things done emphasizes the importance of not relying on your brain to remember all your tasks. Instead, capture them on a phone or a notepad. This way you can organize your tasks without getting them confused, and you can also be selective with how you spend your time. Essentialism reminds us that for every task we say yes to, we have to say no to many others. Therefore, it's important to value yes and not be afraid to say no. After adopting these habits, you should start building high value skills. I've previously said that I don't like the advice, follow your passion. However, So Good They Can't Ignore You takes it one step further. The author interviewed many people who loved their jobs. He found that most of them didn't initially have a passion for their work. Rather, as they improved, their love for their work grew. So what skills should you start building if you aren't necessarily following your passion? The Unfair Advantage suggests that to succeed in an unfair world, you need to play to your natural strengths. Find what you're better at than most people and lean into it. However, it's no longer enough to just possess high value skills. Artificial intelligence is rapidly replacing many jobs. I'm using it more and more in my various businesses to complete simple tasks. That's why the ideas shared in Mastery are more important than ever. My main takeaway was that you need to develop a unique stack of skills that is nearly impossible to replicate. Still Like an Artist echoes this point when it suggests to copy from multiple inspirations until you have a mix that is truly original. Having this unique skill stack will give you the ability to earn a high income. However, that still won't mean you can build wealth without understanding the basics of personal finance. When I was younger, I had a mentor named Dave who taught me about how the rich manage their money. The biggest lesson I learned, which is also shared in Rich Dad, Poor Dad, is that everything we buy is either an asset or a liability. To figure out which one it is, we simply have to ask ourselves, is it putting money in our pocket or taking it away? Of course, if you want to be wealthy, the aim should be to buy as many assets as possible. But lots of people don't see the value of investing. Let me ask you this. Would you rather have $3 million now or a penny that doubles every day for 31 days? The correct answer is the penny, because it actually turns into $10.7 million. The compound effect uses this analogy to demonstrate the power of investing and gaining compound interest. Once most people get their head around this, they get very excited but end up jumping into the markets without really understanding anything. That's what happened in the pandemic. Everyone thought they knew what they were doing, but it was just a massive bubble waiting to burst. That's why I've always followed the principles laid out in the Little Book of Common Sense Investing. It states that trying to beat the market is a losing game. Instead, you should own the entire market. You can do this by investing in something like the S&P 500 or a broad market index fund. Interestingly, over a 35-year period, only 1% of mutual funds could beat the market by 2%. This means that index funds are a clear choice for the average investor. Although, as I do find them pretty boring, I also like to invest in more interesting stocks with a smaller part of my money. Whenever I do this, I keep in mind that the market is irrational. As the intelligent investor puts it, you should imagine a person coming to your door every day called Mr. Market. One day he may offer you $2,000 for your stock and the next only $500, even though the company may be doing better than ever. This is because the price of the stock is based on demand and not the actual real world value. I only buy stocks if I'm prepared to ignore what Mr. Market says for a long time. Another phrase I live by is, if you love the store, chances are you'll love the stock, which was shared in One Up on Wall Street. This means if you've got a lot of experience of a company or product, you might actually have a bigger advantage than the pros when it comes to investing. Before we get to the next level, I have to make one thing clear. Reading books on investing can provide you with theoretical knowledge, but to truly succeed in investing and build wealth, you need to put that knowledge into practice. So if you are going to invest, you need to make sure that you're using a tool that provides you with all the necessary information to make informed decisions. This is where today's sponsor Moomoo comes in. If you're interested in building wealth, then you're really going to want to listen to this. It's a powerful investing platform founded in Silicon Valley with over 20 million users worldwide. You can trade stocks straight from your laptop, iPad or smartphone, whether in the United States, Australia or Singapore. You also don't have to worry about commission fees and account minimums. I personally really like the free tool they offer, which allows you to see what famous institutions are investing in and what sectors are performing best. As a beginner, you can also practice your trading ideas with a demo account before entering the market. If you sign up today using the link in the description, you can receive up to 15 free stocks, each worth between $3,000 and $2,000. That's an amazing deal. These free stocks can help you start building your investment portfolio right away. Level 2. $100,000 to $1 million. Now that you've fixed all your internal beliefs, to make the next leap, you'll need to know how to generate more value than you can from just selling your time. We're taught to go to school, get good grades, and then get a high-paying job. However, when you do this, your earning ability is capped. Cashflow Quadrant outlines 4 distinct ways to earn money. E for employee, S for self-employed, B for business owner, and I for investor. Business owners and investors have the advantage of using other people's time and money to build their wealth. That's why it's crucial to move to the right side of the quadrant if you want to become rich. But what does it really mean to be rich? Well, the 4-hour work week explains this best when it says that relative income trumps absolute income. To understand this statement, let me ask you a question. An investment banker earns $500,000 per year working 80 hours a week. On the other hand, an e-commerce entrepreneur earns $40,000 per year but only works 4 hours per week. Who's richer? If we look solely at absolute income, then the banker is clearly making more money. However, if we consider the time worked, the banker earns $120 per hour, whereas the entrepreneur earns $200 per hour. To take it one step further, the entrepreneur can actually already live the retired life that the banker dreams of, as he can operate from anywhere in the world. I'll take the entrepreneur route any day of the week. 0 to 1 states that the first step to starting a business is betting on a contrarian truth. This is the basis for most successful businesses. For example, Netflix had to bet on the fact that people wanted to binge watch TV shows at home, and Airbnb had to believe that people would be willing to stay in a stranger's house. For many people, the biggest hurdle is coming up with an idea. However, this is often easier than you might think. Disrupt You outlines an effective method, which is to write down 3 things that annoy you every day and think about how they could be done better. By doing this, you'll have 90 ideas to consider each month. When you have an idea, don't be afraid to share it with people that can help you. People tend to be too protective of their plans, but the truth is that an idea alone is usually not that great. The lean startup emphasizes the importance of execution and the use of the build, measure, learn feedback loop. This approach ensures that you don't create something nobody wants and allows you to pivot and adapt your idea as you go. There was an interesting study conducted on 108 new businesses across 30 industries. Out of these, 92 businesses chose to enter red oceans, while 16 adopted a blue ocean strategy. A blue ocean refers to a market that has little to no competition, while a red ocean is named so because of the fierce competitions between competitors. The study found that 39% of profits came from businesses in competitive markets, while 61% of profits came from those that used the blue ocean strategy. Furthermore, these businesses went on to dominate their industries for 10 to 15 years after launch. A good strategy for creating your own blue ocean is to become oversubscribed. Consider Ferraris. Many people want them, but not everyone can have one. Yet the people that run Ferrari aren't losing sleep over this, as they know that this scarcity keeps demand high and the car's highly desired. Every oversubscribed product has people who are willing to buy it but can't get their hands on it. When I'm driving up demand for my products, I always remember the core lesson from Breakthrough Advertising. This book is actually the most expensive book in the video. It states that you can't manufacture desires. Instead, your job is to create a product that fulfills.
I'd cripple myself financially for the next year. That would lead me to revealing how I escaped, retired early, and how you can too. My eyes were really opened up to the possibilities of making mass income. But there's a problem. The system is rigged against you. The worst thing of all is no one really wanted to talk about money. It was so taboo. Hi guys, it's Mark. So I've got some news for you. Retiring with enough money to enjoy the rest of your life, sitting on a beach, sipping on whatever your heart desires, is becoming near enough impossible. Every year, consumer debt rises, owning a home becomes more challenging, and everything is getting more expensive. This, combined with supply chain shortages, the Russian-Ukraine war, and an outdated school system, is a recipe for disaster. Let me take you back to 1902, when one of the richest men in history, John Rockefeller, created the school system as we know it today. As you can probably imagine, this system wasn't created to help people become rich and successful like him. Oh no, no, no. It was invented to create a nation of workers. You see, Rockefeller was an oil tycoon that needed an army of people that worked hard and didn't ask questions. So what better way to achieve his goal than funneling kids down a controlled path with little individual treatment, strict deadlines, and teachers enforcing the rules? No idea that becoming an entrepreneur and following my dreams was even possible. My teachers never really understood me, which meant I found school extremely boring. The worst thing of all is no one really wanted to talk about money. It was so taboo. After leaving this place, I initially went down the carpentry route, making wooden trash cans for only a few dollars an hour. This probably sounds all too familiar, and this broken system is the main reason why people can't retire. I'm not bashing schools or even the teachers, but the fact that school still doesn't teach basic money management, investing, or even building a credit score is just crazy to me. So you turn 18 and leave school with little understanding of how money works and look for a job, only to find 70% of jobs never get listed, meaning it's not what you know, it's who you know. This makes finding a job all the more difficult. But none of that really matters because slimy credit card companies are putting pre-approval letters through our doors, giving us instant access to cash at 40% interest rates, with no consideration of the fact that the majority of the population don't know what APR even means, let alone how to use a credit card correctly. As you can probably tell, that really grinds my gears. Because of this, it's no surprise that consumer debt is over $15 trillion and rising almost every year. The world is changing so fast that school probably couldn't keep up even if it tried. Bitcoin was created in 2009 and it's only now becoming something people talk about as an investment, even though it's been the best performing asset of the last decade. It's very difficult to get ahead and save money with low income, especially at the moment with 8.3% inflation and supply chain shortages. It's not a coincidence that fuel and utility bills are at record-breaking highs and the people are feeling this hit more than ever. So the system is clearly rigged against you. However, I came from nothing and escaped, and so can you. This might look like a normal train to you. However, this is the exact spot I sat when I had a revelation about money that would change my life forever. After leaving school at 16, I got a job as a carpenter's apprentice. That required me to commute on the train every day. I remember one morning looking around the carriage at all the passengers, both young and old, and I noticed they had one thing in common. They all looked miserable. It was clear that not a soul was looking forward to going to work. It was almost like being on a ghost train full of slaves. I felt sorry for them until I realised I too was wearing the same unhappy expression. I was one of them. But why was I so unhappy? Well, it all boiled down to my finances. Although it's a very popular saying that money doesn't make you happy, I think that was probably said by someone that has never been broke. Money certainly gives you freedom, and the lack of freedom was the main reason why all of us were so unhappy on the train that day. I was only getting paid $2 an hour, and from that I had to pay $15 per week for my train ticket and a further $15 to my mum for rent. I had very little left at the end of the week. I thought to myself, why am I working so hard and still getting nowhere? Then I realised I'd taken my eye off the ball. I was getting so wrapped up in going through the motions and doing what I was told that I'd forgotten to manage my money correctly and set goals. When people don't have solid financial goals, they turn into mindless zombies, living for the weekend and never getting ahead. This is when I discovered the times 25 rule, although it probably wasn't called that back then. I pictured what my perfect life would look like and then how much money I would need to live like that per year. I then multiplied that by 25, which gave me my freedom figure. This is the amount of money I'd need saved so that I could fund my life by withdrawing 4% from my investments per year. This is something everyone should do, as it really put things into perspective for me. I became obsessed with doing everything I could to make progress towards this number. I used to do lots of overtime. This is because over 12 hours, I got paid double my usual rate. My friends always used to work just a 9-to-5 job and then go down the pub. They never desired any extra income as they didn't have a solid freedom figure. I also started tracking all of my income and outgoings with a pad and pen. Nowadays, there's lots of different apps that can help you with this. But here's the best part of all. I no longer felt like a slave as I had a clear direction and an escape plan. But things weren't plain sailing from then. A few months later, I was on this very roadside. I was head in hands, realising that I'd cripple myself financially for the next year. You see, I was young and I wanted a nice car. So I bought a green Volkswagen Golf because everyone said it would be a good idea. Don't get me wrong, a VW Golf is a great car and I loved it. But the issue is I took out a loan for the car, which had a really high interest rate. this kind of purchase is typically always a bad investment. I didn't care about this at the time, well, until I was stood at this roadside with a blown up engine. This left me in a right state because I still had monthly car payments to make, and now I had a $1,200 bill on top to repair the engine. I'm thankful for moments like this one, as it's the hard life lessons that make you realise something has to change. I had car loans, repair bills, credit card debt and more at the time, so I thought outside of the box and decided to use what is now known as the debt avalanche method. The idea is you use your paycheck to make the minimum payments on every single bit of debt you have. Then use the remainder of your spare cash to pay the debt with the highest interest rate. Rinsing and repeating this method and taking one step at a time is the most effective way to clear debt fast, and can also save you a fortune by clearing the highest interest rates first. It took me a whole year of using this method to get back on my feet, but I'm glad I put that chapter behind me. I then bumped into a man right here in this very field who had changed my life forever. As a youngster, it is so easy to get complacent about retirement. Look, I get it. When you're 20 or even younger, it's not that easy to get excited about retiring at 65. If that sounds like you, then don't worry. I was exactly the same. However, I was very fortunate because the man I met on this model flying field became a role model to me. I didn't even know he was my mentor. During casual chats, he managed to completely change my mindset by swapping the word retirement with the word freedom. This really resonated with me, as I've always chased freedom over materialistic things like cars and drip. With my eyes set on freedom, I knew I had to begin investing long term and start building my wealth. So I opened a pension account and began investing 10% of my standard wage. Of course, nowadays you'd open up a Roth IRA if you're in the USA, or a stocks and shares ISA if you're in the UK. These are essentially investing accounts that allow you to grow your money over time completely tax-free. However, there are limits on the amount you can deposit, because otherwise they'd just be too powerful. Investing 10% of my income was a huge step in the right direction. It shifted my focus towards not only making more money, but having my money produce more income. By the way, if you want to start investing, then Public.com are currently giving you a free stock slice worth between $3,000 and $1,000 when you use my link in the description. It's a great way to kickstart your investing journey. So at this point, I was debt free and I was also investing, but I was still working every hour under the sun for other people, but I couldn't start investing all over again. I'll do things a little bit differently. So if you can follow all 5 of these steps, then you'll be well ahead of me when you get to my age. Step 1, adjust your risk tolerance. In hindsight, I realised that I may not have taken as many risks as I could have during my younger years. The reality is that in your 20s, you typically have more time than money. This means that any risks you take have minimal downsides compared to those that have families and a mortgage. This is the time to build your empire, so being scared of taking risks is actually the most dangerous thing of all, as it means you'll fall short of your full potential. Of course, you should do everything in your power to swing the odds in your favour. However, you won't be able to eliminate risk entirely if you want to become wealthy. There is still going to be some risk in every opportunity, as nothing good ever comes easy. When times are hard, people are much more likely to let that little bit of doubt get inside their head and talk them out of whatever they want to do. I've seen countless friends say they're going to quit their job to start a business, but they never make that leap because they don't want to risk their comfortable income. When I'm judging whether or not to make an investment, I compare the potential risk with the opportunity cost of not taking that risk. Opportunity cost is what you give up when you choose one option over another. Thinking about this helps you make better decisions about how you use your resources. I'm not saying I always make the right decisions, but on average, I've come out profitable when I've used this tactic, and I also never want the thought of what could have been eating away at me. So the best way for you to grow your wealth is to take calculated risk with your money and use that time to grow your wealth faster than everyone else. Step 2, set it and forget it. I definitely should have automated my investments a lot sooner, as it forces you to prioritize your investments as the money is taken before you can spend it. This is when you arrange to have a fixed amount of money taken out of your paycheck or bank account
every month and put into a predetermined investment. Investing $100 in an S&P 500 index fund is a good example of this. This will allow your wealth to compound over the years without you ever having to really think about it. This is a very straightforward process. First, determine how much money you want to save and from which account. Then go to an investment app and look for an automatic investment option and choose how you want to invest. They'll do all the paperwork. Once you sign off on the bottom line, the automated magic begins. In my experience, the majority of people that lose money when investing waste their time trying to pick the right stock at the right time. And if you've been watching my channel long enough, you'll already know that it's not easy to time the market. For me, investing is all about growing your money over the long term. ETFs allow you to invest in an entire market quickly and in a single transaction by tracking the performance of an index. You can choose to invest in specific regions like the top 500 companies in America with the S&P 500, the entire stock market, or even specific sectors like tech. InvestEngine is a Which recommended provider and is a platform that really resonates with me as their entire focus is on long-term ETF investing. They offer ISAs, which are essentially fortified investing accounts protecting you from taxes. Because no one likes the tax man. With ISA accounts, you can only invest £20,000 per year, but any profits you make can be withdrawn completely tax-free. So I definitely recommend creating an ISA account with them and protecting your returns. If you sign up to InvestEngine today using my link, you'll receive a £25 welcome bonus when you invest your first £100. So you can get a 25% return on your money from the start. They even have an auto invest feature, which invests any cash that hits your portfolio straight into the ETFs you pick, so you really can set it and forget it. Thanks InvestEngine for sponsoring this portion of the video. Step 3. Avoid temptation. I understand why people were drawn into the crazy crypto investments a couple of years ago, as this was similar to penny stocks back in my day. When there's a craze like this happening, lots of people feel like if they don't invest, they'll lose out on an amazing opportunity. So they start investing in things without fully understanding them. This has to be one of the most risky things that you could ever do, and it's probably the biggest investing mistake I see people making. I speak from experience. I made a few lucky investments in penny stocks when I was younger, and had I continued on that path, I would have lost everything. To be more exact, I had the opportunity to invest in a big group with a couple of billionaire friends. Everything they touched seemed to turn to gold. I can't reveal, and if I started from scratch again, I'd do it too, selling info products. I was inspired to make this video after I stumbled across an info product the other day teaching you how to look after chickens at home. The part-time farmer who created this info product is making over $20,000 a month, selling 20 of these online programs at $1,000 each. If you want to achieve the same, grab a notepad as I'm going to explain the steps you need to take in order to make over $10,000 per month with info products. Unlike traditional businesses such as this cafe, info products cater to every market. Just think, no location limitations whatsoever. Right now I'm at one of my favourite beaches, but whether you're in the UK or overseas, we can still buy the same information products online. Since they're digitalised, they're not tied to one specific market. Even though info products have a global reach, they are still limited by the niche you pick, so make sure there's enough demand and minimal competition. Consider the health niche, for example. I normally just think about online personal trainers and workout plans. And let me tell you, that's not for me. But a guy called Anthony Mativa thought outside the box and used his knowledge of languages to create the magnetic memory method, which is an info product focused on enhancing your memory skills. Now, I could do with a bit of that myself. It's not just for seniors looking to stay mentally sharp. Students are also using it to excel in exams, meaning he's captured an extremely diverse audience. So Anthony identified a niche, pinpointed valuable knowledge within it, and as a result is generating an annual income of more than $120,000. So how can you do this too? Well, first choose a skill. Let's say a sport like tennis, for example.
If you can become like a 6 out of 10 skill-wise, then people will want to learn from you. However, taking this route is time consuming. Additionally, if you're not an expert, it could negatively affect sales because you may not appear as trustworthy as someone with prior professional experience. So, how can you overcome this? Well, you could pair up with an expert in the tennis world and build an info product together. An expert doesn't have to be an ex-professional. They might have experience in tennis tutoring, run a club, or have a sport qualification. If you're more business orientated, then this allows you to work behind the scenes to ensure it all runs smoothly, whilst the actual tennis coach teaches within the videos or writes the step-by-step guides. Say you sell 20 programs per month at a rate of $997 per month. It always seems to end in a 7. That would generate $19,940. Then shared 50-50 with your business partner, that would total around about $10,000 each. To be exact, it would be $9,970 profit. Of course, you need to minus your expenses, but you get the idea, and they're not going to be that much on an info product. Now, you could either choose to scale this up and sell more programs per month, or you could partner with another expert and repeat the process. It would be a lot quicker the second time around, as you'll just be repeating a proven formula. Traditional businesses are making a real play towards building out their own communities because they've seen the rise of influencers and the power of followings. Take this pretty little thing order, for example. My son's girlfriend goes mad for this stuff. This unmistakable pink unicorn packaging is so much more than just a plastic bag. It's a symbolic gateway into the brand community, connecting customers with influencers who wear and help design the clothes. PLT's online community pulls in a whopping £712.2 million annually, which is the equivalent to almost $900 million a year. So they've obviously been extremely successful in attracting customers with their branding, which not only enhances the sense of community, but also helps to convert fans into paying customers. So what can we take from this? Well, if you want to increase your conversion rates, then you need to build some kind of community around your info product. But why are conversion rates so important? Well, let's say you reached 50,000 potential customers online, then normally you can expect a 2% conversion rate, which would mean you sell 1,000 products. Let's say you price them at $1,000 each. With a conversion rate of 2%, that means you're going to make $100,000. Not bad, right? Well, imagine if the people that you reach felt like they were part of something bigger, a community led by you in a free Facebook or Discord group. You could boost that conversion rate to 5%, which means you'd sell 2,500 products and make woohoo! $250,000. Hopefully now you can see why brands are pumping so much time and money into building online communities. But building communities from scratch is hard. So here's how I'd go about it. Build a personal brand. I mean, there's so much free traffic on TikTok right now. I don't necessarily think you need a personal brand. Of course, you could just run ads, but it's definitely a much more cost-effective way to reach a mass audience and make a personal connection. One of my old video editors actually followed this exact roadmap. He wasn't the best editor out there, and honestly, he was a little bit lazy, but he understood how to make a YouTube channel and has now launched his own editing course. All of his videos combined have garnered millions of views in the editing niche, and he's now making more than $10,000 per month, and his community worships him like some kind of editing god. And I bet he still can't get out of bed on time. You seriously don't need to be the next Mr. Beast. If you build a strong community of 50,000 people, then there is no reason why you can't be making $100,000 a year. Actually, I take that back. You definitely should be making $100K a year. Just make sure you collect everyone's contact details and build an email list, as this way you can own your audience and not rent it from a social media platform that could shut you down at any point. Businesses have been taking advantage of upselling for years, and it's only getting more common. McDonald's have introduced digital ordering screens to almost all of their locations.
These machines always try to upsell customers to larger meals, sometimes even using pulsing pictures to make you click on them. Even after you've finished ordering, another screen pops up offering additional items with attractive pictures, aiming to maximize the amount of money per order. Here's a diagram of something called the value ladder. This is what companies use to upsell customers, and so can you. As you can see, the customer will always be lured in by some bait and then encouraged to the top of the ladder through various offers. Let's put this into context. There's a new video game out and it hooks you in with a free trial. The bait. The temptations take over and you've bought the full version. That's the first step. After this, they offer a weapon pack, and before you know it, you've spent your entire monthly wage and you've reached the top of the ladder. So how can you create a value ladder of your own? Well, imagine you're selling a fitness info product. So the bait could be a free workout guide which draws people in. For your first step, you could offer a 4-week program for $9.99. Then you could follow this up with a personalized coaching package for $999 a year. I mean, you could even follow this up with VIP one-to-one sessions for $5,000 per year. So if 100,000 people download your free workout guide and 5% buy the program, that would make you $49,950. If 5% of those people, which would be 250, opt for coaching, this would add an extra $249,750 to your pocket. And then if 2% of those people, which would be 5 people, join your one-to-one VIP coaching, it would bring in an extra $25,000. That value ladder would generate you a total of $324,700 per year. And if you want to make even more, then you just have to reach more people initially. I mean, if you manage to get 1 million people to download your free workout guide, then you can multiply all these numbers by 10. As we discussed, create